Good afternoon, everyone from the LPEA. I'm very happy to host you for the last, but not the least, interview of this series, which started at the end of March. And our 21st guest is no one else but Nicolas Buck, that many of you based in Luxembourg will have known. We'll spend 10 minutes with Nicolas, who will answer 3 questions. And Nicolas, I want to welcome you first before introducing you.
Very happy to be here.
I'm still going to say a few words about you that you are welcome to compliment, of course. Essentially, you were, and I want to start with that, Ernst & Young's Young Entrepreneur of the Year back in 2004, quite an achievement. And you're a bit of a flagship entrepreneur here. Having studied in 2 European countries, you came back home for a distinguished career, which makes you who you are today, and with the many different hats. But today, you are with us as the chairman of UEL, l'Union des Entreprises Luxembourgeoises, which is part of the very fabric of the economy of this country, which to us, LPEA is central to what we do. And I want to quote one stat in this respect, is that at the European level, 84% of the volume invested in PE or by PE is in SMEs. And so I think this is at the very heart of what you do, Nicolas. And in the current extraordinary circumstances, we look very much forward to your enlightenment on what's going on at the Luxembourg level and perhaps even at the EU level. For us, the ultimate objective is to ensure that we link our sector much more with the real economy that you represent today. So Nicolas, welcome again.
Thank you.
Great. Well, my first question would be if you agree that as chairman of UEL, you've been incredibly busy, and I want to understand what has been your main achievement, but also your main challenge since the COVID-19 crisis started.
Okay. So just for the benefits of those listening, the Union des Entreprises Luxembourgeoises, we have in effect 8 shareholders, and just to understand the structure. And these are 6 sectoral federations, from banking to insurance to commerce to industry to retail and crafts, and then 2 chambers, so the chambers of commerce and the chambers Chambre des Métiers. And I think it's interesting, just on a historical perspective, that UEL was created 20 years ago. We had our anniversary during the COVID lockdown in June, and it was really out of realization that employer federations needed to coordinate their efforts much more together to be effective, and mainly on 3 or 4 areas. One is labor law, the other was social security, and the last one we've developed is tax for companies, but also tax for on people. And so we work together with all of these other sectoral federations, but mainly with our focus, and that means that we are probably one of the main engagement partners for the government and the unions when it comes to the big questions around the future, and that's the process we're involved with now. And clearly during the crisis, we were very much involved in everything that was linked to supporting those businesses that had been shut down. So that is furlough, so what we call chômage partiel, but also social security changes. You've seen lots of tweaks to the environment to make sure that people could stay at home when schools were locked down. So imagine the minutiae of setting up all of those changes and working, not just in meetings or not just in WebEx, but really mobile phone, SMSs with the government and the unions to make sure that what we call the pipes of society in terms of social security actually work. We were involved on the health side, tax, so it's been it's been work we've done with all of our stakeholders. So it's not just UEL, but all of the guys who work in the federations, but also the companies, the chambers. We were heavily involved also we'll talk about it maybe later, on every, and I'm sorry to be so long, but you asked the question, and
it's a big question, and 10 minutes will never do
justice.
I know,
but I'll try and get to the point. And finally, everything around support measures for SMEs in what we call the vulnerable sectors that are still massively hurting today, from restaurants to hotels to shops, to be able to get those through over the next 6 months. So it's probably been the most intense period professionally for all of us. Very intense and very, very interesting, obviously.
You mentioned the term that makes my second question. What have been the support measures that you've either taken inspiration from in Europe or that Luxembourg could have inspired at European level? And what kind of distinction has been made between SMEs and larger corporations, if any?
Well, again, every country has had a different response on the measures, depending on their culture and what instruments were in place, and obviously also depending on the capacity of financial support by the state. So the countries that had most financial resources were clearly the best at supporting their businesses, and number one in Europe is clearly the Germans in that area, and we're not far behind. So I think it's more a question where the government will look at, clearly, because the government will look around, what are other countries doing? We look at it, and then there's some form of bargaining, and then, but you always have to look at all of the measures. You know, it's like you can't pick and choose and say, oh, the French have got this, we want this, and then you can always say, well, we've got things they don't have. So I think overall, some of the measures were well thought through, and some of the other measures like debt instruments, like state bank guarantees, have not been a success so far. So it's still, and again, it's very early days. I think from our perspective, really, we're looking at a really dark road, and it's getting darker by, you know, if you look at the estimates on not growth, but the opposite, recession, 2020, 2021, it's going to be really tough. So you know, it's really work in progress, and by far not, you know, we're only at the beginning.
I think we tend to agree with you. Private equity is about the long term. We haven't seen the end of the tunnel. The first quarter of the crisis hasn't been portrayed so negatively, but we're waiting now for the NAVs of the sector for quarter two. And this is what I want to ask you about. Everybody's now still trying to talk about relaunching or rebuilding or helping the economy recover. And PE firms, we know, have a lot of cash sitting on the sidelines. What do you think at our level we can do to support the companies that you just mentioned at Luxembourg and EU level? Because often our companies have both dimensions, and we are very keen to bring the industry closer to you.
Yeah, I think that's a difficult question, because I think what you mentioned before, private equity is long term. It's always a question, what is long term, and how do you define it? In my experience, you know, the private equity outlook and their patience it's not consistent in terms of their investments. It can very much change from one firm to the next. I just wanted to put that in, you know, give you my feedback on that, and that is obviously one of the challenges of the industry going forward. I can't answer for Europe, because again, it really depends on the makeup of every economy and the involvement. If you look at, you know, High Street in the UK, yeah, all of the big chains, you know, from Pret-a-Manger to any, you know, all of the sushi places, you know, bowling alleys, hamburger places, all private equity backed, and massive impact. And there it's really a question of how much patience these guys are going to have. Do they stick by their investment line, or do they let it go? And I can't answer that question. Here in Luxembourg, the makeup of the industry is less, because of the domestic market is so small. It is rare that we have a private equity firm that would take an investment in a company here of which the commercial outlook would only be this country. So you've got a vast part of the economy that is out of scope, where private equity firms will look at it and say, well, these businesses are just too small, and they just focus on this particular market. Then we have the financial industry, mainly banks, asset managers. Again, there are private equity firms that own asset managers, but those decisions wouldn't be taken out of Luxembourg. They would go to invest. So I think in this country, as far as the big groups you represent, and I won't mention their names, but you know who I'm talking about, the amount of investment potential directly in this country, I would say, is limited.
Well, you know, you okay, it's time for Q&A, but it's a good lead on from what you're talking about, and we should have a longer debate about the long-term meaning, but in theory, private equity fund holds a company for 4 to 5 years. Nowadays, you see more and more long-dated firms with no limit to how long the holding period can be, 10, 12 years. And of course, the biggest newcomer in this space is family firms or family offices, as we call them. And these families tend to be buy and hold. So I think especially for SMEs in Luxembourg, that should be a good omen. But the question from that, you sit on the IC of a private equity firm. I don't know if you want to name it, but it's literally focused on SMEs in Europe. They have a couple of investments in Luxembourg. So from your experience there, how do you see the behavior going, and what would you like actually? So you'd like longer term even focus, well, and give us pointers.
I think I don't think we have any investments in Luxembourg.
There's one, I think.
No.
Okay. Okay, fine.
What? Maybe.
No, you're on the IC. I'm just an LP.
I don't know. You probably, yeah, but I don't think we have one left. I think we have we have secondary funds, but that's not the objective. That's not the objective of the question. I think the game really in terms of the private equity potential and the responsibility of private equity going forward, because I see, my experience on the IC side is really it's an intense game. Private equity, if you've got good people managing the investment line, it is good feedback for the CEOs, but it's also intense pressure. So you have, if I often put myself in the shoes of the guys we've invested in, and I am a CEO of an operational business, and I see, the pressure these guys are under in terms of reporting, and also the amount of understanding that the private equity managers have of the underlying metrics and the cost drivers of that business, I think it's positive. Yeah. Because you can really add insight and give the CEOs who in every time in the business, to give them a perspective. Hey, have you thought about this? Have you thought about that? So, and I think that's really worthwhile. I always say to flip this point of rendezvous is, then we start tweaking the numbers just in the year before we sell the business. We say, okay, we want to exit. We may invest less, and I think there's fair. I wouldn't say criticism, but I think it's an industry where you always have to think about if politics looks at it, and I deal with politics on a daily basis. Mm-hmm. Clearly, politicians will tell you, and I engage with them every day, say, we prefer the economic model of the German Mittelstand, meaning family invested businesses, foundations, and they never sell. And I think what private equity needs to do is really to show, we may have an investment horizon and then the business gets sold, but this brings new management in, also new thought leadership. It's not probably mm-hmm. always healthy to have a business be run by somebody for 20 years. So, and I think those are some of the pointers I would give to you as far as engage with politicians, explain them the creation of value, that also these businesses, as they start growing, and that's what private equity does, because there's so much pressure on growth, you may compensate the people better, you invest more, you're more ambitious.
And I think that's, of interests, yeah.
Yes, and I think that's really where often the financial industry, and you're part of the financial industry, there's an element of education on public stakeholders. They look at this and they think, wow, this is really bad. This is, barbarians at the gate. They come in, they strip it apart. Mm-hmm. We're there for 5 years, and then we flip it to another fund, and that thing. And all of that may be true, but there's underlying positives there on what I have seen. And my final comment on that: private equity investment, when the firms are good, and there's a lot of great people in these firms, it makes the management better.
I love what you say, Nicolas. We will quote you because this is part of our core message to the public stakeholders.
But they don't sleep a lot. That's the problem. The CEOs, you make them better as managers. You reduce their quality of life. That's the way. If you allow me just a joke on that side.
No. I think we will keep in mind very much your insights, and it's very central to what we're trying to convey to the authorities. So watch that space, please. So maybe to wrap it up, one last question from the Q&A. Obviously, we've all these measures that are supposed to support the economy don't come for free. So tell us a little bit about the country balance sheet and the state of finances at the Luxembourg level. What do you make of it, and how is that likely to impact us going forward? Also,
yeah, I think
as
you'll have
personal
yeah, that's a very good question. It's a question that is highly concerning to us, and I will need 120 seconds to answer that question. So I'm aware of time. I'm looking at at the watch on the timer on the computer. If you look back another 10 years, the tax receipts of the government, direct and indirect tax, never went back during the financial crisis. They stagnated, but they were never reduced. We were at a state budget, 11 billion, 11 and a half. So we had higher costs in terms of expenditure on the state side. But this is the first time in the last 30 years that the state tax receipts, again, indirect and direct tax, VAT, taxe d'abonnement, company tax, people tax, wealth tax on companies, of course, that we are the only ones to have in this country. That number will foreseeably decrease from what we were envisioning, 20.5 billion, and hopefully we'll hit the 18.5 billion number at the end of, so that's a 2 billion switch, over 10%. We don't believe that number, the 20.5 billion we should have had at the end of 2020, we will hit it in 2021 either. We also see structural changes within the financial industry, which is the main contributor to that. And if you understand the links between our budget and social security systems, yeah, we are at a moment of time that is not critical at this stage because the state is rich and we have a large pension endowments, but at a point where we are going to have to ask ourselves some very hard questions how we're going to position this country going forward. Because to answer your question finally on what does it mean for your industry, Luxembourg is a prime benefiter of what we call political and economic stability. You have a big push in Europe to make financial wealth management more a domestic market, onshore than offshore. The big countries want that back. And they're trying very hard and sometimes successfully to get that pie back. But on the other hand, what have we got left? A good understanding of cross-border finance, yes, good company law, but the main asset we have is political stability to say, hey, you come here, this country is well run and it's financially sound. And clearly that we have to protect that. You know, our debt levels are low, but again, we can't be a country like France or Italy with 100% of debt or 150% of debt compared to GDP. I've now taken 2 minutes. So
no, but don't worry. This is
just
part of the Q&A. It's very
just
important.
to give you the context. So for us, massive responsibility for us on the company side to make sure that and the headwinds against us are not great. We had a lot of backwind over the last 30 years, and now we've got some headwinds beyond the COVID crisis. You look at financial regulation, you look at European countries, you look at demography, you look at big markets that are not growing anymore. You know, country like Italy, their GDP per capita today is lower than it was in real term in the year 2000. And so you understand what that can mean for political stability in Europe. We have monetary union that, you know, interest rates are at zero levels. You think who's going to pay for that? So it's not, you know, I wish I would be more optimistic, but I think for this country is a moment where we're really going to have to, it's going to become a lot harder for us. It doesn't mean we won't make it, but I think the last 30 years have been an incredible ride for all of the industries, and you private equity are somehow our latest, the light at the end of the tunnel. And and I think that would be my final message to you, is also to show the government and the unions what your tax contribution is to the state, but what does it actually mean when we move from UCITS into private equity? Where, you know, the impôt sur la fortune, the 700 million or the 800 million that you bring in, or that mainly you bring in on the private equity side, also banks, how much is it coming from you guys? What other tax revenue can bring? Because we are going to need tax revenue. And then a final comment also is, I know there's LPEA, there's ALFI, there's ABBL. It's very important for us at UEL that you guys work as closely together with insurance, with life insurance, to really have what I would call a very collective message. What is very easy for politicians to dismiss is, Rajaa, you come into Pierre Gramegna today at 2:00, Camille Thomas from Alfie comes at 4, and at 6, the guys from insurance come, and he gets a different story every time. And that's been our downfall over the time. So I know we need fragmentation in terms of industry support and understanding, but when it comes to policy advocacy, it's extremely important that these interests are aligned, because he'd be able to say, well, I taxe d'abonnement, I don't do anything here, I can't do anything there, and nobody wins then. So I know it's not contentious, but it's always very important.
No. It's music to our ears, because we've been working very hard in the last 6 to 12 months with Alfie and the other associations to unify the message. It's a message we gave also to the ministry several times. So everything you mentioned today is hugely helpful and also encouraging, because it's the top of our priorities. And we would love to involve you more in this dialogue, as obviously you are part of the real thing. So we'll keep you posted, Nicolas. And we hope we see you very soon. We'll keep you posted on specific initiatives that you mentioned, to explaining what private equity does to create value. But thank you so much. All the best. We need a lot of stamina going forward, and hopefully see you soon live as well. Thanks again.
Bye-bye. Thank you all.
Thank you.